Hello, my name is CPA Ringo Frederick, one of the partners in Arilid and Associates. Today I want to show you, of course, how your payslip will look like from 1st January 2025. I believe by now we are all familiar of the amendments that were done on this act, and it will be important for us to understand how this computation, of course, will be like. So at this point, believing that all of us, we have accessed these amendments, which were, of course, done just the other day. The public notice, which was issued by the Kenya Revenue Authority. Remember, like there was a question where how were we supposed to treat, of course, the reliefs that initially we were deducting under NHIF. So, of course, there are various amendments which were made, and I want us to understand in details these amendments as we prepare our payslips, of course, for December 2024, for those who have not yet prepared, and of course, from 1st January henceforth. So these were the amendments which were done. Of course, my focus will be on what used to be NHIF. By now, you're familiar that it is called SHIF, that is a Social Health Insurance Fund. And we also used to have, of course, the relief on affordable housing. So what was done is that specifically when you're looking at note 2, that the tax relief shall cease to apply when you read about what affordable housing relief and of course the post-retirement medical fund relief. So that's where, of course, I'll want to focus on. So previously, before this amendment, we were taking these as reliefs. Remember, when you hear about relief in tax point, we're looking at them as tax credit, meaning that they reduce the value that's supposed to be paid in terms of the tax component. But when you are talking about the aspect of allowable deduction, because now they'll be treated as deductible or rather allowable deductions. That's what you're seeing in note 1. Amounts deductible in determining the taxable employment income shall include. So with this amendment, we're supposed to treat this as allowable deductions that are supposed to be, of course, deducted from the gross before we arrive at our taxable income. And I want to show you practically here. Let us take these two scenarios. With a scenario, we're looking at before and after, so that you can be able to understand it clearly. We'll be using, of course, the graduated scale rate, which we should be having here. I know majority of us, we are always like, all this is automated, but it is important to understand the principles behind it, so that even when, of course, you are putting it in whichever system that you're using, once it is calculating automatically, at least you know the principles behind it, right? So now let us take this person who is earning 100,000 shillings per month. So you're having this person who is earning 100,000 shillings per month. This is the gross value. If it was before this amendment, this is what will have happened. In this case, first of all, these amounts were not taken as allowable deduction. So in this case, I'd be having 0 there. Whereas for NSF taking a maximum of 2160, I'll be having it at that point. But after these amendments, this is how it will happen. I'll be having these as allowable deductions. And when I read about allowable deduction, that is to say, they are being deducted, of course, from our gross before we subject them to tax. So these are what I should be having, as well as 2160 here. So these are deductions, talking about our, from now henceforth, what we'll be doing. Okay? So that is to say, previously, our net taxable will have been the gross salary. We deduct all these items. But as it is now, with this amendment, this is what I'll be having. What about PAYE? Of course, PAYE will have that effect whereby using this graduated scale rate, of course, I'll be looking at it on a detailed perspective. So you'll find that using this graduated scale rate, this is how it really happens, so that you can be able to understand it clearly. Our focus is on the monthly. So using this scale rate, a person who is earning 24,000, this person on the first scale is supposed to pay tax at the rate of 10%, the rates. Therefore, on the first 24,000, we're taking this at the rate of 10%, and therefore taking it at the rate of 10%, I'll be having that times that. If this person is earning more than 24,000, then he'll fall on the next bracket, which in this case, of course, you're having 100. So I'll also take the 833, in this case, which will be subjected at the rate of 25%. So therefore, we should be talking of the tax amount on that would be 2083, of course, 0.25. The balance, which balance, you'll ask? Which balance? The balance of course, if at all we sum up the two, you can see you are getting 32,333. So that is to say, this person will also fall on the next bracket. But on this bracket, of course, I'll be taking the net taxable because I'm not on 467, we're within there. So I'll take the net taxable with less, of course, that minus that, so that the balance is what will be subjected at the rate of 30%, which in this case will give us a total of 19, of course, 652. That is to say, the net pay, or rather pay before relief, we should be talking of that much. So we take this to our amendments. These are what we think, of course, pay before relief. So looking at the reliefs, initially how this used to be, of course, the personal relief has not changed. So it is still 2,400, 2,400. But before these amendments, we used to have housing, affordable housing relief, which we are taking 15% of the affordable housing levy, which in this case would be 1.5%. So we're having here, of course, we're talking about the 1.5% of the value that you're having there. So these are what will be our, if I told you to talk of before, this will have been our housing, affordable housing relief. Under these amendments, we don't have this relief. That's why we don't have anything at that point, okay? So that as at the end of the day, what will we be having as our net pay due? Net pay due would be 24 minus that, plus of course the value that you're getting there. And at this point, these are what we'll be having. So considering all our deductions, of course, initially, this relief is what I will have deducted at this point, meaning that they just be the same values, taking them as the tax credit. The same case, of course, these are what I'll be having here because they are still deductions. So that as at the end of the day, what will be the impact? As at the end of the day, our total deductions will be, of course, summation. I'll just do summation of this bit. So this would be our total deductions. This will be our total deductions, comparing our before and after, so that as at the end of the day, the amount that you're going to go home with, if at all you have to consider before these amendments, will have been our gross salary with less our total deductions. And on this other end, of course, I'll be having value. So that your net salary, we should be talking of 72,000 72,079 before, but currently you're going to go home with 73,129. You can see there's an increase, right? An increase of course, like 1,000 and something, an increase of 1,050. So that is to say, for a person who is earning 100,000, you'll go home with an additional of 1,050 compared to the previous, of course, the previous system. So I just wanted you to understand this, and I believe you've been able to understand how this system of pay normally tends to work. And I know there would be questions that a lot of companies will be asking, because I understand it is December, and December, of course, majority of the companies, they normally tend to pay their salary early in advance. But as per these directions, of course, from this is with effect from 27th December. So the question would be, if at all you have already paid the salaries, what will happen? In that case, my thought would be like, you can't do, there's nothing that you can do, you've already paid. But if at all you have not yet paid for the salaries, of course, for December, then you are supposed to apply the amendments, or you're supposed to effect these amendments. So that is what I needed you to understand, and I believe you've learned one or two things, of course, for business persons as well as accountants. So that's it for today. I was your instructor, Aringo Frederick. As I mentioned earlier on, I'm one of the partners at Arilid and Associates. Thank you so much. You enjoy your festivities.